So right here, right in pink on the Ichimoku, okay, we have our baseline length. This is one of the first lines that make up the Ichimoku indicator, okay? Now, the reason that I show you this one first, okay, is because this is one of the moving averages used in Ichimoku to create, quote, golden and death crosses, okay? And you can think of this like your 200 period moving average, okay? This is supposed to be the more stable moving average. Now, the reason that I pulled this one up with only this line, there was a reason that I wanted to show something to you guys, okay? Check this out. I'm going to turn on the Donchian channels. Okay, now this is an indicator that you have not heard a lot of people speak about before, okay? But we're going to turn on the Donchian channels. These are similar to Bollinger Bands, okay? But I want you to notice something with me, okay? We're going to turn these on. Let's see what happens. Okay, cool. Interesting, right? Interesting. Donchian channel. Okay, cool. Now, this, if I remember. Does that fix it? There we go. All right, now let's turn off the Ichimoku for a second. Whoa! Where'd that green line come from? Whoa, 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 whoa. Hey, now, what's that all about? How come the Ichimoku line baseline is that the exact same place as where the Donchian channel center line is? Interesting, hey? Isn't that kind of interesting? So the Donchian channels are actually an extension of Ichimoku, in which the center line, when you have the adjusted center line on the Donchian channels at 26, it can show you that same baseline as the Ichimoku line on the Ichimoku cloud indicator will show you. So at a glance, right, lots of people like to use the Donchian channels over Ichimoku because it basically just encapsulates price action while also having the Ichimoku line here, right, without it actually being physically on the chart. So just something kind of cool and unique that I wanted to show you guys there regarding the Ichimoku and the Donchian channels. All right. Now, going back to the Ichimoku, we talked about how this baseline, right? This baseline is basically like our 200 period moving average in that you can have death crosses and golden crosses through it. Now, what makes up those death and golden crosses? Well, that's your other length right here, okay? This is your conversion line. All right, this is the Ichimoku conversion line. And you can see how this thing is a lot more volatile and it moves a lot more, right? The reason that this thing moves a lot more is because it takes into consideration less price action, right? If we open up the indicator, look at the Donchian channel conversion line, right? It's only taking into account the last 9 candles. And so what we say when we use Ichimoku is when you have the orange line, right? When you have the conversion line cross through and above the baseline, that is said to be a golden cross. When you have it break down underneath the baseline, that is considered a death cross. All right? So people will use these two specific lines, right? Very similar to how they use moving averages, right? The 50 and the 200. They will use these in a very, very similar manner. It's just that the Ichimoku ones, right? Because they take in less time, right? Because the Ichimoku lines take in less time into consideration, right? Because the baseline is 26, this is 200. This conversion line is 9, this is 50, right? So it's like a more reactive, right? It's like a more reactive moving average. You could argue that it's very similar to exponential moving averages, right? So now the other side of this indicator and why people really like the Ichimoku cloud is for the clouds themselves, right? So you've got your leading span A and leading span B. It just puts the clouds on the chart, right? The most important thing to understand about the clouds, okay? The most important thing that you need to understand about the clouds is the wider and larger that those clouds are, the more resistance that lies above, right? Or if you were above a large green cloud, the more support that lies underneath. So when you see big, fat, fucking red clouds, it generally tends to indicate that there is heavy, heavy, heavy amounts of resistance above, and that you are very unlikely to get through that. And that just speaks to the widening range of price action, right? And then what these clouds do, you guys can see that price is here, but the cloud is all the way up here. It's because it's forward looking. And it's because this is taking into consideration prior price action, current price action, and then spitting out clouds that predict future price action. And future price action, when we tend to see these clouds get thinner and thinner, it suggests that the range of the stock has become tighter and tighter and tighter, right? And so when we look at these clouds, right, when we look over here, they're super, super wide. But the other thing that we notice about these clouds is they're also flat, right? What's that all about? Well, interestingly enough, these flat sections on the clouds will oftentimes line up, all right, with Fibonacci's. Okay? So, oh, my tinfoil hat just fell off. So when you see these flat sections on the clouds, oftentimes they will line up with macro Fibonacci levels. So in this instance here, right, let me just get rid of this. So in this instance here, right, this upper cloud right here, if you pull a fib from that high down to this low retracement, right, interestingly enough, again, the cloud lines up right with where your golden pocket is. Then this little lower section here was where your macro 236 sat. It's where your macro 0.5 sat. It's where your macro 382 sat. Once again, Fibonacci's lining right up at these levels. And then back down here, your 0.5 Fibonacci, and then you've also got your 236 here. If we just drag this across, you guys can see 236 right there. So oftentimes, right, Ichimoku, right, the reason that people like this so much is rather than having to, and again, I know this is going to sound fucking hilarious, but rather than having to put in all of the work of drawing all of the stuff and da-da-da-da-da-da, you can just turn on that indicator. You can see pretty clear kind of fib lines and resistance that are above. You might not know, I'll say specifically what Fibonacci's they are, but you know that there's resistance above at those areas, right? And then if you're trading Fibonacci, oftentimes what we look for as traders, if we are looking for breakouts or potential moves, right, is when these clouds thin out in the future. Because when they thin out in the future, price action then does not have to work as hard to break through these zones or these areas, right? And so when price action, right, when these clouds give us these little openings like this in the future, it suggests that price action in the future has the potential to break through that little section, right? Because it doesn't require as much volume, as much momentum, and as much velocity to get through that as it does through something like this and something like this. And you can actually see that reflected in the last couple of times in price action, right? So GME, Ichimoku cloud, super, super, super red, but it gets through it, right? And then when it starts breaking down, the cloud really thinned out. You stayed underneath it. Then the cloud was green, but look at how flat it was here, right? Signaling that there was some resistance levels here. Now, I'm willing to bet if we pull out a fib from da-da-da-da-da to right there, right? Not really. I don't really see anything too interesting in there. I wonder if I pull one from up here. No, not even. Okay, anyway, sorry. Then you can see that price action is staying underneath these clouds, right? Using it as resistance. And so when we were trading this in this 9 weeks of hell, right? One of the reasons that we started to get excited on this bounce right here is because we were like, look at the cloud. The cloud split open. There's a huge, huge, huge open area of space for the price to just explode through if this is the breakout move. And unfortunately, it just ran right into it, smacked it right down. And then just before earnings, that cloud really opened up and then we got fucking destroyed into Valhalla. But once we got destroyed down to this $10 range and we started bouncing up, look at what happened to the clouds again. They thinned out and it opened up the skies for GameStop price action to break through it. And what did we do? Big candle, big volume, big velocity, boom, 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 right on through it. Then we used old resistance, turned it into new support, and then exploded off of that. So you can imagine why when we look at the indicator here on GME with the Ichimoku clouds, right? The future has opened up the skies for us, right? Towards basically the beginning of November. It has opened up the area for us to make explosive moves through if GameStop continues to remain bullish, right? Now, we know that based on this indicator, there is going to be hard resistance at $22. And then we know that we have our two little moving averages sitting right here, right, at about 21 and 21.50. So we know that if GameStop stays underneath 22 to 21.50, we're in trouble. Because that cloud will then start to fan out and start to get big as the volatility starts to pick up. And if price fails to break through that and that cloud starts to widen up big and red and we are not on the positive side of it, right, you can anticipate that there will be a push down, right? In the very same way that we did here, right? These clouds thinned out way up here and we had no chance of getting through them. And then once we hit this peak and we rejected these moving averages or these, I'll call them moving averages for the sake of it. Right? We rejected these moving averages. Look at that cloud, how it started to just expand in a big, nasty, meaningful way. We had no chance of breaking out during this whole period of time because listen, every time the cloud has been that fucking thick and red, you have been in really big trouble. Like, it has not been generally positive. Right? So you can imagine why, like, this area of price action has been so shit. But like, look at how the volatility is just disappearing and price action is tightening. And we can see that displayed both on price and in the clouds. So over the next couple of weeks, like, it's thin and we've got opportunity to break through this thing. It's just going to be a matter of, do we have the bulls? Do we have the buyers? Do we have the momentum? Do we have everything that we need to push these things through? But this particular indicator, right, can identify not just support, not just resistance, right, but it can give you signals. It can give you potential openings on where you could anticipate or expect a potential breakout, right? Lots of different and unique ways to use this indicator, right? And the cool thing is once you kind of start to understand this indicator, you will kind of start to understand some of the other ones that are involved with this, such as the Donchian channels, right? Because the Donchian channels are a really fantastic indicator. These are just like the Bollinger Bands, okay? These are identical to the Bollinger Bands in the sense that if you were above the center, it is considered bullish, and if you were below the center, it is considered bearish. But I'm going to teach you something about these that are really fucking unique that a lot of people don't talk about on these things, okay? Now, you guys can see on these Donchian channels, right? You guys can see on these Donchian channels that they make very flat tops, very flat bottoms, right? It's not like the Bollinger Bands where these things kind of move like in and out like this, right? These Donchian channels are very flat, right? Anybody disagree with me about that, or you guys good with that so far? I want to make sure that you guys see this because this is an important part right here. When you guys understand this indicator right here, this is going to help you trade, right? This is just an indicator that I haven't really spoken about before. It's a little bit more complex to understand, but I promise you guys, if you understand this, things will start to make a little bit more sense in terms of support and resistance, okay? So check this out, okay? Donchian channels encapsulate price, right? You guys can see that clear as day on the chart. Donchian channels, price rarely ever goes outside of them, right? Look at price action here just on your guys' screens, right? Look at price action just on your screens. The Donchian channels and price action, price has been inside of them 99.9% of the time, right? So being that they've been in here 99.9% of the time, right? What you have to do with the Donchian channels is pay attention to the highs and the lows and those flat lines that are created. Now, why are they important? Okay, I want you to look at this, okay? This range of price action here. Okay, now, check this out, okay? Price action comes up, makes this move, right? And then it wicks into this high right here. And when it wicks into this high, this Donchian channel upper band remains dead flat, right? It goes dead flat for multiple weeks, right? And then when price action rejects this upper band, it comes down here, right? And then you have this lower band right here, right? This lower band of the Donchian channels right here. Now, I'm going to do something here. We're going to draw a trend line right across from it, okay? Now, this is why I talk about body candle closes and body candle opens all the fucking time. Because this indicator taught me everything I ever need to know about it. When you have candles that have body closes, either above or below the Donchian channel lines, right? So we marked off this flat line right here, right, in white. And when we had a body candle that closed underneath it, the Donchian channel moved. And oftentimes, when you have the Donchian channels, when those bands are flat and price closes below the flat level that was established, price will then make the move and push those channels. So you can see in this instance that price has a body candle close outside of the low of this line right here. And when that body candle closed, it led to the significant push down, which led to those Donchian channels breaking down. And the same thing happens on the upside here. Look, right? Donchian channel is flat right here, right? Body candle closes above it, price pushes up. Right? Same thing right here. Price wicks into this low, creates this flat level. You don't have a candle that closes underneath that flat level, and then price finds a healthy and significant bounce. And then using this little stair step of price action right here, this is a premium example, right? You wick this low, create this flat line. Body candle close underneath it, price pushes down. Then it creates this flat line. Body candle close underneath it, price pushes down. Then it creates this flat line. Body candle close underneath it. Price has a temporary push up before it then ultimately pushes back down. Oftentimes when you have the body candle closing either underneath or above that upper or lower Donchian channel line, it is a signal that price wants to move up or down from out of that range. So like GME here in the most recent price action, right? GME in the most recent price action, right? Check this out. We drew a line here, right? Because this was like our most recent flat section. And you did not have a candle that closed above that trend line. That's why we have not gone higher. Same thing on the downside, right? You draw a trend line on the low side of that Donchian channel. You have not had a candle that has closed underneath that lower trend line. And that's why we have stayed in between those two trend lines and this particular price range. It doesn't have to be rocket science, right? Isn't it beautiful, right? And then look at what happened when the sneeze, right? When the cat squeeze started to happen, right? We established this very flat trend range, and then you had candle close above it. That led to the Donchian channel rising, and then we had this flat line. Then you had a candle close above it, and bye-bye. Right? These things are not coincidental. They just aren't. It's technical analysis. And the more that people become comfortable using technical analysis, whether it's Ichimoku clouds or Donchian channels or Bollinger Bands or moving averages or RSI, right? I just show all of you guys these indicators, and it's not to confuse you or to give you too much information, but ultimately you will find something that you like that works for you. And if you find something that works for you, then use it, right? Use it all of the time. But the Ichimoku clouds are a really nice indicator. They are complex, right? There's no doubts about it that it is complex. But the more that you start to understand how that particular indicator can show you bullishness and bearishness in the moment, while also showing you potential breakout zones and times in which these things could take place, right? You can see how you can use an indicator like this without having to have 10,000 different things on your chart. So I hope you guys found that Donchian channel and Ichimoku cloud session helpful. And hopefully you can use that going forward to your advantage.